Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Hey, speaking of tech, the market's heightened focus on AI is raising investors' hopes as consumer tech giants and watchers and journalists, everybody. I mean, people are going from all over the world to Las Vegas to go to CES, formerly known as the Consumer Electronics Show.
Bring your hand sanitizer?
Yeah. I mean, that is the most important thing to bring. The battery charging stuff, you know, for your phone and hand sanitizer, because if you haven't gotten sick yet, you're going to get sick at CES. I have bad news for everybody. Joining us live to set us up for the event, Maribel Lopez, founder and enterprise AI analyst at Lopez Research, and Carolina Milanesi, president and principal analyst at Creative Strategies. It's great to have you both with us. Carol mentioned bring this hand sanitizer. Both of you know that at this point by this time going to CES. Carolina, I want to start with you because there's always a theme at CES. I mean, when I went years ago, it was like, this was before the Apple Watch came out, so everyone was talking about wearables. And the year before that was, the Internet of Things. That was going to change everything. Is it just AI this year? Is that what it is?
Sadly so, in so many different ways, but AI is going to be everywhere. Whether we're talking about AI in cars and how that is helped with EV and self-driving, or we're talking about the start of humanoids taking over our work at home or in factories. From a consumer perspective, who doesn't want somebody doing the dishes for you? And then AI from health perspective. So more applications that will use sensors and drive data to offer a more personal experience in whatever device you're using. So yes, AI overload for sure.
Maribel, come on in on the conversation as we get ready for CES and lots of stuff to flood the Bloomberg in terms of announcements from different companies. What are you watching out for?
One of the things I think is really interesting, and Carolina picked up on some of the great themes that we're looking at right now. I don't think those themes are different. We've always talked about automotive. We've always talked about PCs. This year it's going to be AI PCs. Again, we had AI PCs last year. What I think is interesting is CES, the Consumer Electronics Show, is so much of an enterprise show right now. You have folks like Caterpillar. You have folks like Siemens. We're talking about humanoids. It's the year of physical AI, in my opinion, where we really start to see these robots come in that are for everything, as Carolina mentioned, from your household chores. But we're going to see a lot in warehouse, manufacturing, healthcare, hospitality. So we're really starting to look for how that's actually playing out in the market. It's a big chip show, chips for everything, AI everywhere, AI in small devices, AI in large devices. So that's pretty much the name of the game here. Some software as well that we're going to see around AI.
I don't know, Maribel, convince me that this is not the start of some dystopian horror flick where, we're all just around our homes and we have these robots that are...
Tim's been sick a couple days, or a couple of weeks now, sitting on the couch.
So it could be the Sudafed talking, I don't know. But I don't, do we want these robots in our homes with us?
So first of all, and Carolina, I'm sure you have a perspective on this as well, I still think we're a long way from actually having the robots in the home. We've been talking about autonomous driving for a long time, and we're not all driving autonomous vehicles right now. But I do like directionally where we're going. We have across the globe, if you look at some of the issues with age in Japan and needing to have cobots, that's going to happen. I think we see these first in the enterprise. They have to be proven out in the enterprise because they have to be in environments where they're not necessarily with humans until they can get everything right. Because as you said, what could possibly go wrong with robots running around, right?
Carolina, what could possibly go wrong? But I do think about, I let Roomba into my house. Now I look at it and it was very primitive, and I know it's not really a company anymore. But I do think about how we have easily kind of given a lot of our world over to technology. I don't carry cash anymore, so I am all in on like a digital universe. Is that the same when we think about humanoid robots? Are we going to be as accepting?
I think it's different, especially when you welcome something that looks more human into your home. You see already with consumers that there's a lot of sensitivity around cameras, for instance, in the home. And when you start, the Roomba is pretty harmless, right? What damage can it actually do? Maybe polish your floors too much. But, when you're actually talking about robots that have more cameras that are eye level, that can freely roam around your room and house with children involved or pets involved, I think there's a security concern, there's a privacy concern. And we don't know that the ROI is there yet. And I think that's where, from a consumer perspective, you always have to balance. We're willing to give pretty much everything up. Look at how much we put on social media, and then we spray in privacy, right? But we need to have that return of investment. And I think that's the part that is still unclear.
When does that become clear, Maribel?
So from my perspective, I think first we have to see this really proven out in commercial. We have to see it be able to work with humans in things like factories before we put them into our home with our pets and our children, as was mentioned. AI is getting better, but we still have to get to the point where it's not just the physicality of the robot, it's the software, it's the speed of processing, it's a price point issue. These are expensive. They're too expensive right now for businesses to buy. So we're really not at consumer-grade robots. And by the way, on that Roomba, I've had many a cable that were chopped up and sliced up quite a bit. So a few things that were downed by them. Chopped up by the Roomba. They love cables. And the next thing you know, your electronic devices are on the floor. So if you're in a cable-free house...
Well, nobody said these devices would actually get along with each other.
I got to say, I know, I had some carpet fringe that was chewed up a little bit, but I was like, if you're going to vacuum, there's going to be some problems here.
I've got you.
That's your return.
Exactly. Seriously, though, we've just got about 2.5, 3 minutes. Carolina, let me start with you. I mean, who will be the winners when we look at AI and technology, or things, maybe some tones or hints that we might get out of CES that you think we could be talking about a lot this year?
We're definitely going to talk about AI throughout 2026 and years to come. This is not a trend that is going to just vanish. This is something that is going to be with us for a long time. And for me, the winners from a company perspective, especially when it comes to consumers, are the brands that are not making trade-offs and not using us consumers as a byproduct of their success. So transparency when it comes to AI is going to be critical, because transparency is going to drive engagement and trust. And without trust from a consumer perspective, you're not going to get to what you want from consumers, which is daily engagement. And that's what, at the end of the day, is going to make all the investments that we've seen for companies across tech worthwhile.
Maribel, come on back in here. You cover enterprise and focus more so on enterprise. What's your prediction for enterprise tech that we're going to be talking about a year from now, that maybe not unveiled, but will be talked about a lot at CES?
Well, actually, I still think we're in the picks and shovels business with CES and with AI. So we're going to hear a lot from the chip companies. Those chips are going to go into everything, whether it's large or small, as I mentioned earlier. So I think they're going to be very successful over the next year. I think we've talked a lot about the AI PC, but if we look at the things that you need to actually make AI run in consumer devices, those are the things we're going to be still talking about that are successful. Some of them are dead boring, their servers, their storage, their chips, but these are the things that make the world go round right now. And those companies will be the companies that are making the announcements of things that will actually be deployed next year. Lenovo with their AI factories. We've got Jensen talking. We've got Lisa Su talking from AMD, Qualcomm, so the chips, the servers, the storage, they're all going to go into devices, and it's a matter of whether or not they're large or small. So I think those are the trends that are, while not sexy, are the things that we're going to be talking about that have to happen so that we can get to the next level to actually make AI a reality in people's homes.
Hey, 10 seconds each. Just curious, if there's one person or one company that you're going to be watching this year, watching out for, who might it be? Maribel, to you first, 10 seconds.
I'm still watching Lisa Su. I'm waiting to see if she gives Jensen a full-on run for his money.
All right. Interesting. And Carolina, same question to you. A person or company that you're going to be watching very closely this year.
I think NVIDIA, just because there's going to be more challengers to them. And so it's going to be interesting to see how they respond to the changing market.
All right. Should be an interesting one. Again, I can say. Both of you, thank you so much. Happy New Year. Great to have you here both in this discussion. Maribel Lopez, founder and enterprise AI analyst over at Lopez Research, and Carolina Milanese, president and principal analyst at Creative Strategies, joining us here on this Friday.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
I want to bring in Laura Namias. She covers New York City and state for Bloomberg News. She joins us from New York right now. Laura, what do you make of both of these announcements, these executive orders, the Office of Mass Engagement, the Mayor's Advisory Committee on the Judiciary Leadership? How is this helping Mayor Mamdani deliver on what he promised during the campaign?
Well, both of these are interesting, but for different reasons. First, I should say Mamdani has had a very busy first day and a half in office. He's darting around the city. He's issued 5 executive orders already before the one that he's issuing now, creating this Office of Mass Engagement. But this is something that mayors do in different ways. In my experience, my observation, try to find ways to stay connected to the people who put them in office in the first place. Mamdani's supporters and some political observers have said that Mamdani needs to maintain a connection to the people who put him in office, to the sort of grassroots support that elevated him from a relative obscurity to becoming the mayor of New York City. And it seems like the creation of this office and the appointment of a woman who was the architect of a lot of his virality and campaign engagement to lead that office is a nod to that. The other announcement is really interesting, and I'm eager to hear more and learn more about it, report more for us. One of the last bastions of sort of non-competitive elections in New York City, I don't know if our listeners or readers know about this, is the judiciary. Maybe you've noticed on your ballot when you're filling it out, it says pick 5 candidates for judge, and there's only 5 names available.
Yeah.
It's a wonky to get into, but it's not a competitive process. And it sort of sounds like what Mamdani is doing here is appointing Mr. Najmi to look into that, among other things, and potentially address that in New York City and state politics.
Okay, so maybe we'll actually have a choice, Carol. Maybe we'll actually have a choice.
That would be nice. That would be nice. Well, as you said, Laura, it's been a busy 48 hours for the new mayor of New York City. And we, of course, will continue to monitor their press event happening in downtown Brooklyn and certainly report it out, as we know you will be doing so throughout the year. Laura Namias, New York politics reporter at Bloomberg News. Laura, thank you so much.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
So let's get to and see what our next guest has to say, because he is thinking about a new era defined by innovation and financial accountability, and that there are 3 key themes that investors should focus on here in the new year. Let's dive into those themes with David Schassler. He's head of multi-asset solutions at VanEck Funds. Hey, David, good to have you here. Happy New Year.
Happy New Year. Thank you for having us.
Well, it's great to have you back here on Bloomberg. So talk to us about this new era defined by innovation and financial accountability. Are you talking about AI companies that are getting lots of money and spending lots of money, but yet not making money? Or are you talking about something else?
We're talking about a lot of things. Everybody's grounded. If you just think about investing, people are grounded in what they're used to, and they're used to a pre-2020 world where debt doesn't matter, deficits doesn't matter, and you don't have this innovation that's literally changing the world. And what we're talking about right now is really setting up portfolios to thrive in that environment. And that's what I want to talk about.
All right, so get into it and tell us in terms of what that means for maybe market rotation, companies that we should have on our radar.
Yeah, so the first theme obviously is AI, technology, automation. Got it, not really a new idea, and people are probably sick of hearing about it, but we're moving from phase 1 to phase 2. Phase 1, these scarcities were in the compute and they were in the energy. We're now moving to phase 2, which is the adoption. That's investors looking at it and saying, how do I get paid back? How do companies incorporate this technology to improve margins? That means it's going to get harder, all at the same time where competition is going to get a lot more fierce. What we're saying is you could still make money in technology, going to be a lot harder in 2026. We're overweight technology, but we're underweight the MAG stocks. So that's theme number one. Theme number two is the build. How are we going to build it out and power it from an infrastructure perspective? So we're talking about infrastructure development. How do you actually use old world assets to build the new world? We're overweight real assets. And then the third theme, if you don't own assets with embedded scarcity, we're in a period of financial abundance. We're in a period of financial excess. We've been here for a long time, but we're in a period now where accountability matters, debt matters, deficits matter, and you really need to have assets with embedded scarcity. So when you look at your portfolio, if you don't see gold in your portfolio, we view that as financial malpractice.
What?
You must have
Hold on. Why?
Wow.
Gold is the ultimate store value asset. It is the ultimate and original unit of account. It has outsurvived every fiat experiment ever. And when you have a system with so much debt, it's effectively acting as a sponge, absorbing liquidity. And as that continues to happen, all roads lead to more money creation, more financial stimulus, more excess, right? When you don't have a lot of good options and you've spent and borrowed so much, the path forward becomes pretty obvious.
Okay, so that's your view on gold. I mean, every portfolio is different, but you argue if you don't have gold in your portfolio, it's financial malpractice. How much gold should people have?
5%. So we're not talking about betting the ranch on it. We're just saying that when you look at your asset allocation, you should have stocks, you should have bonds, you should have real assets, and you should have assets with scarcity, and that's predominantly gold. But I'd also argue as well, 1 to 2% Bitcoin makes sense as well.
I want to go back to gold because if you go back to the late 80s, early 90s, all the way to...
She's looking at a chart, folks.
I am, 2004. I mean, it's like a straight line. I mean, we know gold went nowhere for so long.
And look at silver, what Mike McClone reminded us. It took 50 years for silver to actually move.
Right. So I'm just curious. I mean, why do you think now it must be a part of your portfolio? Because who's to say it's maybe just had an unusual run up in the last year or so, and that maybe that's not going to continue. Maybe that's the anomaly.
So if you just take a step back and you look at asset classes over extended periods of time, you've got equities are the top performing asset, followed by gold, and then you can go into bonds and you go into commodities. And gold has historically been a strong store value asset, and it's performed very, very well. The average annualized return, if you go back 50, 60 years, is somewhere around 8%. Now, there's certain periods of time when it really comes to life and outperforms. It was up over 60% in 2025. We're not saying that 2026 is going to look like 2025, but we still think it's going to be a strong performing asset. It's an asset, if you look at it, given the issues that we're facing as investors, it's well suited to protect you. So we're not saying that gold is the only thing that you own. But if you look at your portfolio and you want a diversified, well-balanced asset allocation, how could you omit it entirely? That's where our pushback is.
Okay.
Are you convinced?
I don't know.
Okay.
I mean, I feel like we are, I hate to say it's different this time around or we're living in unusual times, but I do agree with you, David, that at some point, governments and the deficits that they have, it's going to matter.
We've heard about that forever, and then it's never, when has it mattered?
We'll see, right? The rate environment's going to matter, right? If the U.S. government is spending a lot more on interest, I mean, that's a problem.
It's been mattering post-2020. We've had persistently elevated inflation. During that period, we've had a stealth bull market in real assets. Gold has really come to life. We came out early last year with a price target of $5,000 in gold bullion. We said 12 to 18 months, and we think we're on target for that. We think gold hits $5,000 sometime in 2026 and goes beyond that. It's not going to go up in a straight line, and it shouldn't go up as much as it did in 2025. But we think that the bull market in gold, as well as the bull market in real assets, is going to continue for an extended period of time based off of the historical spending that we've done here and the spending needed to facilitate this CapEx build out for the onshoring as well as the infrastructure build out needed to support AI and other technology.
We were just showing everybody watching TV the 40-year chart of gold, and a big part of that was what happened 2012 to 2020, which was that gold went down and kind of did nothing, and it took 8 years to get back to those 2012 levels. Hey, David, before we let you go, give us your Bitcoin. Give us the Bitcoin skeptic view.
That chart was
that's the 40-year. That's the 40-year. Yeah. The 40-year or the view on Bitcoin convince the skeptics rather that you should have at least 1 or 2% of your portfolio allocated to Bitcoin. I mean, this is a year where it fell 6.5%. It's down roughly 30% from those all-time highs. What's your conviction?
Our view on Bitcoin is that it is very similar as a store value asset to gold. It has the same embedded characteristics and predominantly the scarcity that allow it to be a store value asset. That being said, it's a highly differentiated asset relative to gold and every other asset out there. Our view on Bitcoin, it's now maturing. It's a teenager at this point. It's underperformed significantly, right? It was down around 6% in 2025. Underperformed gold by about 70%. So a huge dislocation. Underperformed technology stocks by about 30%. So we very much look at it as a coiled spring going into the next year. It's outperformed most other asset classes in most of its years of existence. So purely based off of relative mean reversion, we expect it to be a catch-up trade. But more importantly, the wind's at its back because of that embedded scarcity. And as we think the financial conditions become more easy in 2026, we think that Bitcoin's going to rally later in the later part of the year.
Okay, we'll have to get you back on the program, David, to check in with that prediction. David Schassler, head of multi-asset solutions over at Van Eck Funds.
Stay with us. More from Bloomberg Businessweek Daily coming up after this.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
We want to talk a little bit about what's going on, particularly when it comes to Tesla, because boy, have the times changed. China's BYD overtook Tesla as the world's top EV maker, a company that Elon Musk once dismissed as competition in a 2011 interview with Bloomberg.
You don't see them at all as a competitor?
No.
Why is that? I mean, they offer a lower price point.
I don't think they have a great product.
Why is that?
I don't think it's particularly attractive. The technology is not very strong. And BYD as a company has pretty severe problems in their home turf in China.
Right.
So I think their focus is, and rightly should be, on making sure they don't die in China.
All right, that was Elon Musk in an interview. That was back in 2011. We should point out that he made some comments again on BYD. That was in May of 2023, a post on X. And he said, in reference to that 2011 clip, that was many years ago. Their cars, BYD's cars, are highly competitive these days. So he's changed his tune a little bit. But, there's a rivalry, no doubt about it.
I think that's fair to say.
I think that's fair to say. Let's see what Bloomberg technology co-host Ed Ludlow, Bloomberg tech co-host Ed Ludlow has to say. He joins us from out there on the West Coast. Also on the West Coast, Ray Wang. He's CEO of Constellation Research and co-founder of AI Forum. Hello, gentlemen. Happy New Year to both of you. But Ed, let's kick it off with you. 2011, a long time ago, right? And Elon then came out and said, okay, they've got some pretty cool stuff. What's going on with the EV race? I mean, is it just a case that Elon's got a lot more competition today?
It's interesting because they actually both suffer from the same counter forces at the moment. The headline is that on an annualized basis for the year, BYD sold more electric vehicles around the world than Tesla did. But we're talking about pure 100% battery electric because BYD also does hybrids. Tesla does not. So BYD hit 2.26 million pure battery EVs. Tesla did 1.64 million. In China, they're both facing a very aggressive, competitive field. Xiaomi, Xpeng, Geely is right behind BYD in the number 2 slot. And China, just like in the United States, is rolling back incentives. The main point of difference being BYD doesn't sell cars in America. So Tesla's got to take all of that in aggregate and look at the European market too, where there's evidence that Musk's political activities earlier in 2025 weighed on demand as well.
So is it, I think about, Ed, how Elon thinks about this. I mean, he still has a very viable business, right, when it comes to EVs.
Yeah. In the third quarter of 2024, Musk said that his kind of best prediction was that Tesla's growth would be about 25-30% in 2025. In the end, it was down almost 9%. And he put that on the idea that they would have new affordable versions of the Model 3 and Model Y. They did. Partly there is just macro weakness in EVs in America. And partly, this is not a stock or company where the valuation lies in the bread and butter business anyway. The final thing I leave you with on that, though, is do remember that the board has set Elon Musk a mandatory goal of delivering 20 million EVs over the course of the next 10 years. And if he doesn't do that, he won't realize his full compensation or voting rights reward. And so it's still incumbent on him to focus on it, even if, to his mind, the future is robotaxi and humanoid robots.
Ray, I want to bring you in here because you spend a lot of time traveling around the world. I mean, you were just telling us a few minutes ago of what your next few weeks look like, and you're going to be traveling all over. So you see the way that BYD cars are all over Europe at this point. In your view, can Tesla compete outside of the United States with BYD? Reminder to everybody, you can't buy a BYD here in the U.S.
I think Tesla can't compete in a market where they don't have tariffs. And I think the reason is, as Ed knows, I mean, you're basically producing cars at $10,000 a unit. We're producing them at $23,000 a unit. That's really the problem. Our cars are way too expensive. And the vertical integration that BYD has from supply chain all the way out to a dealership in Europe, I mean, it's something that Tesla hasn't been able to replicate. So it'd be very, very hard in general without tariffs for Tesla to survive, or for the German automakers to survive in Europe as well. Without any kind of tariffs. So it's going to be interesting to see what the global response to China will be for all the dumping of vehicles, EV vehicles going on into Europe and Asia.
The only thing I would throw in, guys, is the data point I found most interesting, noting that BYD also sells hybrids, but 1 million of the vehicles it sold were outside of China. Yeah. So to Ray's point, but the Tesla response to that would be that they built this facility in Germany, and that they always wanted to have manufacturing within the market that they sell their vehicles at. But Europe's not exactly the same cost basis as China either. So they're kind of stuck in that regard. Right. So they have China, they have Fremont, they have Austin, they have Germany. But they sell in a lot more markets than just those. Hey, Ray, to that point, in your view, has Tesla diversified enough away from autos with self-driving, with the software as a subscription, with other initiatives that it's doing, like Optimus in the future, to make it a company that is worth buying, in your view?
Definitely a company worth buying. Short term, it's really on the energy side. They did 12.5 gigawatt hours of energy deployment in Q3 and 13.4 in Q4. So people are definitely buying the mega packs. So that's your short term. The midterm is really going to be how the robotaxis turn out. And that's going to be an interesting conversation. But the incentives are put in place by the board, as Ed was saying there. And then longer term is really Optimus on the robots. Midterm, too, is also Grok, depending how you look at that. How Grok and the physical AI and the and all the software side comes together. But this is really the challenge: is how do you run multiple product lines and be able to focus and deliver at scale when you have operators in China that operate on one area focus with massive scale. And so in the long run, I think Tesla becomes a company that builds the robots to build the cars and build everything else, and less so on the car and automobile side.
But I do think that maybe running multiple businesses is Elon's secret sauce. Ed, this is a company and an individual you've been following for a long time, whether it's energy deployment, whether it's robots, whether it's Grok. I mean, this is a guy who seems to thrive on doing a lot.
Yeah, there's nothing in the compensation package which was, ratified by investors that limits or stops Elon Musk being at the helm of multiple companies. There is no suggestion that he stops being the CEO of SpaceX when it goes public in the middle of next year, for example. There is a lot of interplay between those companies, but he's very clear, as we wrote about in Businessweek in August, right, on the front cover, there is a reason that they're not under one umbrella, and that is largely the regulatory headache that would bring to Elon Musk. It's okay to run them as separate companies, to Musk's mind, where they kind of have close relationships, but they are distinct and separate. And you either do or you don't accept the future vision, which is Tesla doesn't focus on selling cars to consumers. It runs a proprietary ride-hailing service with various formats of robotaxi. and it does sell to the general population a fleet of humanoid robots. And if you do or don't accept that's down to you.
Hey, well, can I go as far, Ed, to ask you, do you think Elon or Tesla is moving on from EVs at some point?
But this is why you have to go with just the facts. And what is ratified in the comp package is that Elon Musk is required, it is mandatory to sell 20 million vehicles over a 10-year period. So what's he got to average per quarter and per annum? Right now he's not tracking to reach that goal.
Hey, Ray, before we let you go, and I want to, hopefully we'll get time with both of you on this, talk a little bit about SpaceX and what an IPO for 2026 looks like for SpaceX, specifically Starlink's business, Ray. Just from your analyst perspective, how does that business look on its own?
Oh, I mean, the Starlink side of the house is growing crazy. They've got the commercial pieces. You've seen the partnerships with companies like United Airlines. You also see the commercial residential piece picking up as people are buying them across the board. But it's more than that. They're profitable, right? This is one of Elon's profitable companies. It's going to be potentially anywhere from the 1.2 to 1.5 trillion dollar IPO. And Starlink has got 8.5 million subscribers right now and going to about 10 million by the mid next year. So this is something that is probably one of the most valuable assets within Elon's portfolio.
Ed, jump on in here because you and the team have been the ones reporting all the exclusive details on a potential timeline here in valuation.
The only thing I'd add is the reason they want to raise $30 to $40 billion is they know they need to buy GPUs for their plans for space-based data center. And I think we'll have all year long to talk about the idea of data centers in space.
Yeah, Mark Gomboff laughed at me when I asked him about data centers in space just a few minutes ago.
He said there's enough stuff up there.
And he said we still, there's enough stuff up there and plenty of room down here and plenty of solar power that comes to the Earth to power data centers.
Yeah, he didn't seem to like
Japan just had that thing where they're able to actually generate power in space and bring it down. I think there's like an article about that. So
fascinating stuff.
No shortage of what we're going to be talking about with both of you. Ray Wang, CEO of Constellation Research, co-founder of AI Forum, and also, of course, Ed Ludlow of Bloomberg Technology.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.